Hello and welcome to BQ Prime. There is less than a week to go for the union budget. Lots of questions on everyone's minds. What is the fiscal deficit finally going to come in at? What will the government target next year? What will the government's spending priorities be, especially in its last full budget before general elections? To share his thoughts on this and a lot more, we're joined by Sudipto Mundle, Chairman for the Center for Development Studies. Hello, sir. Thank you so much for taking time out for us today. So to begin with, we saw the advance estimates for the current fiscal. What's the fiscal math looking like to you? Will the increase in tax revenues suffice the increase in expenditure?
Yeah, my guess is that because of the buoyant tax revenue that we've had, and this is across all categories of taxation except excise and custom, because they lowered the tax on fuel, as you know. Because of the high buoyancy of tax revenue, I have a feeling that they will in fact be able to cover their expenditure projections. Maybe a small slippage, and I wouldn't worry too much about it.
All right. And what's this fiscal math looking like for next year when we're expecting growth to be slower?
Yes, next year, the growth will, we are projecting something like 5.2%. And even though inflation has peaked, if you allow for something like 6%, around, broadly 11 to 12% growth nominally. And that will affect the revenues that will come. At the same time, you cannot completely ignore the need for fiscal consolidation. It's a complicated situation because growth is actually faltering. If you look at the quarterly growth rates for this quarter, we are projecting just 4.5% growth. So growth needs to be propped up. At the same time, fiscal consolidation is necessary, and you're going to get some moderation on the revenue. So it's a very complicated picture. But I think that they should set a modest fiscal consolidation target, not push it too hard, maybe 0.5% of GDP reduction from this year's target, which is 6.4%. So something around 5.9% for next year, and then go on to eventually over the medium term get it down to 3%.
Sure. Okay. So capex is broadly expected to remain in line with what we've seen in previous years. You have, however, highlighted even earlier the concerns around state capex.
Yes. If you look at the state's fiscal performance, they are also consolidating quite sharply. Most of the states, except a couple, there are a few outliers. I think Bihar and Andhra are two of them. All of them have actually seriously cut back on their expenditure. But that is happening largely at the cost of capital expenditure. So, of course, they've also been helped by a fairly buoyant flow of central transfers, their own tax revenue, and so on. But part of the hit for their fiscal consolidation is being taken exactly by capital expenditure, as you just mentioned.
So, considering that state capex comprises an even larger part than the central capex, what's the solution? Because this is a bit of a challenge considering the government's efforts to continue to drive capex.
There are two things. Part of it is just a technical administrative matter. If you talk to the states, they will tell you that when they are making their budgets, they don't get to know how much will be the quantum of transfers from the central government. They get to know that much later in the year. And so the time that they have to actually ramp up their spending and so on is very limited. And that's part of the problem. I think if the central government give them early signals at the time when they're making their budget about what are likely to be the flows from the center, they have a fairly good fix on how their own revenue mobilization will go. So then they can make more realistic their own expenditure projections to consolidate without compromising on capital expenditure.
Sure. Okay. Something else that you've written in detail about is subsidies, your entire argument differentiating between merit and non-merit subsidies, how several non-merit subsidies like fertilizer subsidies in case of India still remain high. That remains the situation this year. The government is likely to see some reduction next year. So what's your outlook on the subsidies?
Yeah, the central government actually has been doing quite well on that question. You referred to my earlier work on merit, non-merit subsidies. The central government has substantially compressed its non-merit subsidies, and much of the non-merit subsidies now are actually with the states. That study referring to includes both center and states. So there's not much room for further compression in the central government. You referred to fertilizer that is there, but there are other visible subsidies like food, which is a merit subsidy, and you don't want to, cut that out. They have done some rationalization, as you know, and that's fine. The bigger expenditure on which rethinking is required in the central government, I think, is what are not subsidies but transfer payments. And some of those, especially something like Manrega, needs to be sustained, and one should be more liberal on that front. But there are others on which you might start wanting to economize.
All right. The government has consistently been unable to meet its divestment targets. What's happening in that space, despite the fact that this year we saw a significantly lower target than the previous year? Just meeting these targets seems to be a pain point every fiscal.
Yeah, I think that's happening because you set very ambitious targets. And then, divestment is something that has to be market sensitive in the sense, I mean, it would be ridiculous to, divest something when, let's say, the stock values are very low. So there's the issue of timing. And I think on that, from whatever I've heard, the present, person in charge of that has a sensible attitude that we will sell when it's a good time to sell, and it doesn't exactly meet the targets. Well, that's part of the reality, but you shouldn't sort of throw away your family jewels at throwaway prices simply because you've set a target. And maybe the targets should be set more realistically and modestly.
Okay. So not so much related to the budget, but on several instances earlier, you've also highlighted the need in the Indian economy to increase productivity. Can you elaborate a little bit on that?
Yeah, that actually has to, in any case, raising productivity is a very important issue, but it has become particularly important in the present context of our growing, current account deficit. We normally think of something like 2% of GDP as a safe deficit. Now we are looking at something close to 4%, and I'm really worried about that. Now, the knee-jerk reaction to this is you start, raising a custom duty and so on. That's just the wrong way to go because it creates actually an anti-export bias. A much more sensible thing is to not fiddle around with, ad hoc, custom duty changes and so on, but allow the exchange rate to, switch expenditure from imports to exports. I mean, that's what we call expenditure switching. And that is, in terms of policy, the way to go. But this will also not solve your problem unless you raise productivity within the economy in order to make Indian products actually competitive, globally. And that is why raising productivity is absolutely critical in any case. If I might add, that also is not something that's going to happen easily unless you have an appropriately skilled workforce. We have a big problem of low-skilled workforce. And the workforce, in turn, cannot be skilled unless you have a sound foundation of basic education. We are way behind our Asian competitors on these things. The new education policy, which was rolled out in 2000, actually, I think can bring about very positive, disruptive change, but didn't have a chance because of the COVID pandemic for 2 years. But going forward, I expect some good things to happen on the education front, which will then enable better skilling and therefore rising productivity.
Lastly, amid normalizing growth, increasing global headwinds, what's your reading of the current state of the Indian economy?
Well, it's been said that we occupy a sweet spot in a global economy that's very troubled, lots of headwinds and uncertainties and so on. And I think that's true. But we also have our big problems. As I said, inflation probably has peaked, but it remains elevated. Growth is still faltering. Revival has not yet happened, and we need to keep our focus on that. And the current account deficit that we just talked about. So these, I think, are the main policy priorities. And keeping that in view in the forthcoming budget, as we have already discussed, we will have to do some fiscal consolidation, but we should not be too gung-ho on that and really push for high this year. Wait for a year or two, let this growth pick up and stabilize, and then we can go for serious consolidation.
All right. Thank you so much, sir, for an extremely insightful discussion. Stay tuned to BQ Prime for continuing updates on the budget.